SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. We're going to talk about the UK's mini budget, not specifically about the budget, but the thinking, the thought process behind the budget, which again, you know, it sounds like they purposely want to crash the economy and grow it from the foundations up. So there's going to be a lot of analogies in this video, as there usually is. And before you start pointing fingers, I'm not for any particular government or against any particular government. I'm pretty much neutral, sitting straight in the middle. I'm just going to talk about it from a financial perspective, almost as if I was part of the decision making here. Not that I agree with it or disagree with it, but as it is going forward, they've decided to do this. Let's see what the method behind the madness would be. So in summary, what they've decided to do is to try and stimulate growth in the economy by lowering taxes across the board, also abolishing to a large extent stamp duty, so propping up the housing market. But the problem is the inflation's rocket high. It's the highest in the UK that it is in Europe, from my understanding. It's very, very high. And so to try and do this at this very particular moment is almost guaranteed to at least bring the pound further down in value and probably crash the economy to begin. Right? And then their thought process, from what I can see, would be to be the first out of all the countries to have a crashed economy to which they could lay the foundations to build it back up again. So they won't be saying that sort of thing out loud. What government is ever going to stay in power if they say we're purposely trying to crash the economy in order to build it back stronger later on down the line? And I'm talking years. Because if you crash the economy, you crash individual households, you crash people's lives. Nobody is going to be in favour of that. But effectively, that seems to be the method behind the madness here. So, like I say, I'm not for nor against it. If this is what they're going to do, I've thought about it since the budget came out, trying to work out if it's complete madness or if it is a stroke of genius. If you look at it through the eyes of maybe, somebody who's completely devoid of emotions, like a robot, for instance, it might be a good idea. It is the sort of thing you could imagine an emotionless robot say, all right, this is, I've thought about it, I've mulled it over, this is probably the best scenario moving forward. So we're going to crash the economy, we're going to crash the pound, and then we're going to, from the foundations up, attract large-scale investment, okay? So we're going to have a very cheap pound versus its dollar pair. If you're anything like me, since while we were in the second, especially into the third quarter, it was painfully obvious that the best place to be is in dollars. Most large investors are going to be sitting in dollars. And while traders trade currencies in pips, investors trade in percents. We're going to incentivize that large investment with a lower income tax bracket. And for the record, the UK has actually already, prior to this mini budget, got the lowest income tax bracket in all the developed nations in Europe. Sitting at a modest 45% for the top bracket, it's only the underdeveloped nations, with the exception of Norway, who are heavily gas rich, and so they've got a lot of money from natural resources, and a much smaller population as well. Now the 45% has been reduced to 40%. It's a huge incentive to set up shop in a place like Britain due to income tax and ground floor investment on a wrecked economy with an infrastructure that is world renowned, especially in the financial services, that won't be going away anytime soon. It's going to be there. It's been there for many, 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 many years, and it'll be there for many years to come. Now, unfortunately, this isn't really going to benefit the normal person out on the street. This is like the beating heart of Britain. And so you can look at this mini budget in a way as a way to resuscitate a country which has gone into cardiac arrest or about to go into cardiac arrest. So obviously, and quite rightly, there's going to be some serious questions raised about all of this, because the repercussions for most people are going to be pretty devastating. So to name one of the most obvious scenarios which is likely to unfold over the next year or so is that the housing market in the UK is probably going to fall quite dramatically. Most people with mortgages, if they're lucky, they will have a fixed rate mortgage from a few years ago. They might be insulated throughout this period to get a fixed rate mortgage at 2-3%, maybe 4 or 5. But any mortgage which is due to expire from its fixed rate is going to suddenly find itself creeping up into the 7s to their 8s, 9s, maybe even 12% as the Bank of England start to raise rates. And you've seen it recently. There's been about 900 mortgage products come straight out out of the market from yesterday, I believe, or the day before, on the day of the mini budget anyway. So mortgages are harder to get, and basically this makes a huge problem in the chain of the housing market. People who were already in the chain and now leaving the chain, and basically it's going to start to topple the market. Now, obviously, the government have had a vain attempt at trying to stop this by, taking away the stamp duty to a large extent. It's irrelevant, really. What's stamp duty in comparison to a high interest on a mortgage? Nothing really. It's swallowed up, goes straight into a black hole. So the housing market is going to fall. Now, most people won't be able to afford their mortgages. It's going to start to I say most people. A lot of people have bitten off more than they can chew. If you're highly exposed to loans and mortgages and any kind of credit, you're going to struggle. It's going to be a big problem for you. If you are exposed to debt right now, it's the worst time to be exposed to it. So you're going to see a lot of defaults take place in the UK when it comes to mortgages down the line over the next few years. People can't afford their own mortgages. People who are sitting in a housing market chain looking to buy, dropping out of that. The housing market in the UK is likely to pop. And look, at the end of the day, like, houses in the UK, just from my personal perspective, are largely overvalued anyway. So there has been a bubble waiting to burst, and I think this is going to be what's going to burst it. It might burst slowly, but it looks to me like this is going to push it over, and it's going to start to burst. If people are defaulting on their mortgages, basically their houses go on the market. If there's so many houses going on the market and not the right incentive or at least interest to start buying it, the only people that can buy these houses are people who are heavily rich in cash. They don't need to take on mortgages, or very small mortgages at that. So there's going to be an enormous wealth transfer, at least from the people who are struggling to pay their mortgages, who default and lose the house, and then it gets bought up by somebody who is cash rich. And so, understanding the likely scenario with the housing market here in the UK, let's just expand that now to a bit more of a broader view. We're talking about businesses. It doesn't matter about the size, small, medium, large. They're going to be impacted on this too. There's going to be businesses collapse left, right, and centre, leaving nothing but the foundations in their place. And those foundations can be built upon by people who have the capital to build on them, and now the incentive with lower income tax and a cheap pound versus your dollar, to which you're most likely going to be sitting in. So I'm really honestly not trying to defend this budget at all. I'm trying to break it down to see the impact in the short term and the long term, and honestly just trying to dissect the method behind the madness, when it comes to financial policy from this government, especially in the economic environment that is being felt globally, but obviously nationally in the UK as well. Probably more than most, actually. So once again, it's the same old thing, isn't it, really? The working classes and the middle classes now getting absolutely shafted here. And it's those with the big bucks that come in and clean up again, whether it's the housing market or even just the businesses in general. It's going to be a painful couple of years for most people, I can tell you that now. But if this plan was to stand the test of time and it actually does work out, 10 years from now, the GDP of Britain will start to increase once again, 5-10 years down the line. But the reshuffling of wealth will go into the hands of the rich, or for those people with the financial education to understand that this is coming and how to position themselves appropriately. And me personally, just on a personal level, I mean, looking at the scenario that's going to unfold in front of our face, looking to position yourself in stocks and indices, or just even planning your pension. The FTSE has been one of the biggest underperformers of all indices out there. It's basically static, has been for years. But looking forward, decades down the line, that might start to change. You might actually start to see the FTSE 100 as one of the major performers of all the European indices. But in the short term, it's almost guaranteed to crash. But like any crash, comes opportunity. It's like Winston Churchill, what he said, don't let a good crisis go to waste. I mean, unfortunately, that is the expression which is going to be the talk of the town amongst anyone who's got the money to do it. That's basically the environment that's been laid out in front of us. We're going to incentivize a crash, we're going to allow the crash, and then from the crash, we're going to build the foundations back up again, hopefully with new money that comes from outside of the UK, or even within the UK, but largely outside of the UK, to set up shop, set up businesses here, big ones, small ones, medium ones, buy up the houses, whatever, and we will come out of this 10 years from now, not unscathed, but actually stronger. but there is going to be some savage and severe pain take place for most people throughout that period. And to be honest, even 10 years from now, they will not likely to recover, unless of course you've planned for it and positioned yourself appropriately, or you're in any way insulated from this pain which is going to come. So in a nutshell, I can see the method behind the madness. I'm not here to agree with it, but I can see the method behind the madness here, and I thought I'd make this video to try and explain it in layman's terms, what it means short term and long term. Yeah, you know, just very briefly, short term is going to be horrendous, long term the rich will win, but at least the country will survive. And that in a nutshell is probably the bottom line of this mini budget. You know, trying to maintain Britain as one of the superpowers of Europe, as the entire of Europe descend into financial meltdown. Let's get it over with, get it done and dusted, whatever it takes, and then build up with the incentives before anybody else does. So like I said, I'm not in agreement or disagreement with this mini budget. It is what it is. But with all the words that come out their mouth when they were talking about it, the only things I heard was, we have decided to crash the economy and build it back up from scratch. That's basically what I hear them say. And so if that is what they've decided to do, we're just going to have to prepare for that to happen. So I thought I'd make this video to try and explain it to you in simple terms. You know, what it means going forward, you know, which for most people is going to be pretty horrendous and devastating, but for the few, it could actually be a valuable opportunity to invest. Anyway, good luck out there. We're going to need it. Like I say, on a personal note, I know people that are going to be affected by this. So I'm lucky enough to have insulated myself against this, but it doesn't mean that I won't be personally affected. It's going to be pretty hard. It is definitely going to be a pretty hard few years moving forward here. So, but anyway, hopefully that has been in some way useful to you, to try and put it into perspective. I mean, it is a relatively easy thing to accept. But it's going to be a difficult thing for everyone to manage. Anyway, take it easy. Thanks for watching.